Hello everyone. I want to thank you for coming to this presentation between Trend Following Mentor and ForexP. And the title, whoops, thought we started our broadcast. Okay, we are.
The broadcast is now starting. All attendees are in listen-only mode.
I want to thank everyone for coming to this webinar with ForexP and Trend Following Mentor. And my goal is to make this an aha experience for you. And I want to also thank Elena from ForexP for having me as a presenter. The goal of this webinar is to give you an idea of a trading pattern that works on all time frames, all markets, that can give you the propensity or the possibility of actually making a living trading. It is not easy under any circumstances. The reality is the goal of this webinar and what I try to help you and teach you is to help you succeed. The reality is that 90-some-odd% of all traders don't succeed. And the reason is three reasons. They don't have a plan or a methodology. And on today's lecture, I'm going to actually give you a methodology that works, and you're going to see it live as we're talking. I have it going right now. And I'm going to show you some old charts also that happened last week. The other issue is that you have to have the correct mindset, which we're going to have another lecture with ForexP, and we're going to discuss how to approach fear, how to approach greed, how to really master yourself. And the other tenet of successful trading, obviously, is you have to have money. The other fact I really want you to understand, this is not a get-rich-quick, this is not an immediate success, that you're going to have to do some work. But if you want to put the work in, I'm here to help you. I can help you and help you succeed. Before we jump in and we start looking at charts, what's very important is that you read this disclaimer, please. I'm going to leave it on there for a couple minutes. There's charts on here that are hypotheticals. And this is done for education, so you can learn. Okay, let's jump to the next slide, and then we're going to jump to some charts. My name is Andrew Abraham. I have been a professional trader, money manager. I've been trading since 1994. And I can tell you, it's not easy. But I'll tell you the next thing. If I can do it, you can do it. It is possible. It is within your reach if you want to put in the work. And the work is working on a trading plan and also having the correct mindset. I'd like to say that I have a book coming out with Wiley Books. It's coming out next month. And in that book, I do detail pretty much what it takes to be a successful trader. And again, I want to reiterate, this is not a get-rich-quick, that you have to work. It's not easy. It's not a retirement in a box. And it's a process. And don't expect to be, let's say, a doctor overnight. Don't think that you can sit with, let's say, someone like me for a weekend and actually completely master this. This is a process, and you have to be patient with yourself and kind to yourself. So let's jump in. I have a couple charts. Let me give you a chart right now just to prove to you the fact this is happening as we're talking. The idea is that we're working on the psychology of many other traders. As I said, 90% of all other traders fail. My goal is to get you to become this 10% that are consistently successful over time. That doesn't mean every trade's going to work. Don't even think about that for 1 second. That's not the reality. The reality, or what the goal is going to be, is that there's only 4 possibilities that I talk about. You're going to have, or the potential of having, a big loss. Well, the first thing you're going to do is you put a stop in the market when you enter. And that enter and that stop and that entry, you're going to figure out how many contracts or what size you should be trading. And you should not risk more than 1% of your account on any one trade. Continuing on that, you're going to have this plan to know what you're exactly doing. So you're going to have the 4 options. A big loss, which you're preventing or trying to prevent. That's a better word, trying. Because again, anything can happen. And I'm going to show you some charts that things did happen. Like I call it ACH. Anything can happen. Believe anything can happen. So you put a stop in the market to attempt to avoid the big losses. Then the next reality is you're going to have a lot of small losses. But that's okay. You know, there's no way to prevent losses. And if you think there is, you know what? You're deluding yourself. The next reality is you're going to have a lot of small profits. And then the other reality is a very small percentage of the time, rare, you're going to stumble on some major trades, some major trend following. What I teach is trend following. Basically, you have trend following, you have trend breakouts, and then we have what I'm going to talk about tonight or this afternoon is a breakout failure where people are wrong. And because they're wrong, you're going to benefit, or you stand the potential to benefit. This is a natural gas chart. Again, this works on any time frame, any market. It could be Forex, it could be commodities, it could be stocks. I just built these because I have these going on my chart. What's happening? We're looking for a divergence, which is here. You have a low, lower lows, higher lows. This is a very simple indicator. This is an MACD. So I have a divergence on my MACD. That's one of my first criteria. What I'm looking for is realistically a change in trend, to identify a trend in the market that's changing. And this is live. This is natural gas as we're talking. You can see the bar going up and down. And what's happening here? You look for key reference points, important highs and important lows. You had a low, low, super low, the lowest low. And probably at this point, most people were thinking to go more short. But look what's happening. You have a divergence on the MACD, and this is a pattern. Basically, you have a low, you have a lower low, you have a close below the lower low, and now we have a low risk setup. What does it mean? Here's my low, here's a close below that lower low, and really what I'm saying is I'm going to take a buy stop above this bar, a close above this bar right here. And you can see it right here, this bar. Your risk is from here, from the high of this bar, which would have been here, to a couple of ticks below this point. It's a low risk bet. What we're looking for are low risk bets to identify a possible, maybe, a change in trend. And let's say if this trade didn't work. And I'm going to show you a couple charts from last week where it didn't work. We had a small loss. Big deal. That's all this really boils down to. And this becomes the tenet of our next discussion, which will be, I guess, next week when Elena organizes it, is how to have the proper mindset. So you don't have fear. That you don't have greed. And really the way you don't have fear is you know you're supposed to enter here. You know you're entering here, and you're taking a very small risk. You could be risking 1% of your account or 0.5% of your account. So let's say, what does that really mean? If you have a $100,000 account, you only want to risk $1,000. If you have a $50,000 account, you want to risk $500 at a 1% risk. You can determine what that risk is. But once you accept that risk, you put the trade on and you see what happens. And in these cases, you want to exit like we would have been taking our profits right now at the swing high right here. This would have been what profit possibly if you had done multiple contracts? And this becomes the idea of position sizing, that you want to put on multiple contracts, or you could have taken one off here if we ever hit that point. We don't know. But let's just do a quick show of hands. Does everyone understand that basically what we're looking for is a change in trend, a change in momentum, which we see here. We have a divergence, lower, higher. This is a simple MACD. This is not, excuse me, a complicated indicator. You don't need complicated. Complicated does not hold up in the real world. Robust and simple hold up in the real world. Can everyone just put your hand up if you have any? Just want to make sure everyone's clear, and then we're going to jump to the next chart. Hands up if you understand, hands up, hands down, or hands down if you don't understand. And I'll just take a consensus. I'll just take a look at what everyone's doing. Okay, most people get this. Okay, great. Again, just for those that didn't, what we're looking at, and we look at key reference points. Have the prices tested an important high or low and failed? Here they're failing. They tested the lows. People think that we're going short, and they're basically, there's a new trend starting, possibly. Okay, it's very simple, very easy. Another simple thing you could have done, very easy, draw a trend line. And you would have seen the breakout of this. Not complicated. Draw a trend line between the highest high, farthest away, the prior high before the low, which is here. Connect it. I didn't really connect it. It was pretty obvious. You see it right here. You had a break. You had a break of a trend line. So you had new lows that didn't hold, that failed. Failed new lows. Failed expectations. Again, we're dealing in psychology. This is all what successful trading really boils down to, is observe the market. Your opinion, my opinion, means absolutely nothing. All we're doing is we're observing the market and seeing what the market's telling us. The idea is like this. We tested, we failed, we're going up. These people are wrong, they're getting a little nervous. At the first swing high, you could start scaling out of your position, which you hit right here. Ka-ching. You didn't have to have that many bars. These are hourly bars. So your exit point or your profit points are at a previous resistance or support level, whatever you want to call this. This could be a resistance. And if we were going short, they would be support. What I did today is every hour, on the hour, I'm looking at a bunch of charts. I was looking for ideas. What happens is good trades jump out at you. You have to wait for good trades that basically jump off the page, that you wait for a familiar pattern. And it boils down to 3 ideas to succeed. Method. Here's a method, very simple. It's a pattern. Low, lower, divergence, a failed low, and you start moving up, and you take your low risk bet, and you see what happens. Whoops. So basically, this is chart 1. I'm not going to jump to another chart. I'm going to show you a chart. This one is a nice one. This one did not work. And that's what I want to show you. Do not think that this is the holy grail, that every time this is going to work. We're dealing in uncertainty. We're dealing in the unknown. You need to believe that anything can happen, that you have to trust yourself to follow the rules. So let me talk about this one. This was last week. This is a bond. At the chart, you don't really see all of this, but this is where I got taken out. The idea is like this. You had all of this congestion. Just observe what's happening here. Ka-ching. You have a new high. Chopping around, chopping around. Try taking out that high again. It failed. Look what's happening to the momentum. The momentum is falling. So basically at this point, I said, great. I drew a line under here, and I said, this is the point I'm going to go short. Nothing to think about. I knew my risk was a little bit above here. It was a small risk bet. I was willing to put it on. Put it on here, let's say. 1, 2, 3, 4, 5, 6. Boom! The trade didn't work. But so what? I had a small loss. My stop was here. I'll repeat this. Draw a trend line. Trend line here. You get to draw a trend line here. Hit new highs. You look for key reference points. You look for new highs. You look for new lows. This is the new high. And then for whatever reason, it petered out. And you're looking for when people are going to be wrong, where the momentum is diminishing. Because at significant reference points, when there's a change of trend, you want to try to get in early to identify a change of trend. And again, it's still 50-50. And in this case, this trade didn't work. And it was a small loss. But it didn't matter. Not a big deal. No emotional baggage. Because at this significant point here, traders, their possibility of something happening was raised. Pretty much they thought it was breaking out and it was going to keep on going. Well, they were right and I was wrong, but big deal. You're looking for when a large number of traders take the opposing position and that they're wrong at a significant reference point. A reference point, again, is a new high, a new low on the chart, whatever your time frame is, and you don't want to bop around between time frames. The other thing, too, you want to look at is you can go back and look at the daily high and the daily low just to give you a little bit of perspective. And the concept is trying to just be logical. You want to be different than the herd. The herd does everything together. The herd, the 90%ers, what I call them, the majority of them lose money. You want to be different. And that's what this is about. That you have the self-discipline and this technique to stay focused on what you need to learn and accomplish the goal. And when the trades don't work, you don't beat yourself up. You go look for the next one, which we're going to. Right here. Here we go. This was a huge trade. This was gold. Same idea again. Key reference point, new low. Everybody and their brother thought gold was going down. Tested around, tested the low. Here's the pattern. Low, lower low. Now you start having some positive momentum here. So you have a low, low, and this close is below this one. So this is your trigger. You're looking for a close above this bar, which happened right here. You measure the distance from here to here. It's a low risk. You don't want to risk more than 1% of your account on that trade. That's it. 0.5%. And the more positions that you can put on, or the more number of contracts for the same low risk, that's where you benefit. This ended up being a monster trade. Got in here. The other thing, too, is you need to have the patience to stick with the trade. Here's your key reference point, your last support. Boom. Boom. Massive return. And it's not that you knew anything different. You didn't do anything different. You had a simple pattern. You identified the low. You tested it. The momentum was picking up. You took the trade. You had a small risk. And you know what? Here's the exact same scenario in reverse. High, the high, and then it failed. And look at the momentum here. It failed. And you had the massive move down that you could have profited. Again, do not think every trade is going to be like this. These are rare trades. Going back to the 4 possibilities, big loss, small profit, big profit. This is a rare kind of trade. Your goal, when you're taking this trade, your responsibility is to put a stop below the low here. But also understand that anything can happen. There could be news, and you can have one of these huge bars, and it blows right through your stop. It can happen. Anything can happen when we're trading. Let's jump to the next chart. Same deal. If you look at this chart, key reference point, low, lower, but the momentum starts picking up. So you mark this bar as your low, and then you're looking for a close below it, which is right this bar. You're buying the close of this bar, which is right here. You want to find the close of this bar. When this bar, the high of this bar closes, it's this next bar where your high is here. Go for the trade. See what happens. You're risking from here, actually from here, down to there. Does that look like a big risk to you? It's not. But again, believe that anything can happen. Where's your key reference point? Around here. This is your support. It hits it, goes right through it. Boom. Try to ride the trade. Keep it running. Runs here. It's another big profit. So let me just, I'm going to reiterate for the umpteenth time. You look on your chart for a significant low, and then a lower low. And then you're saying that if the low doesn't hold, there's going to be a lot of upset people. And because the herd is wrong, I'm going to benefit from them because they're going to cover their trades. And that's exactly what happened here. The momentum started picking up. Low, lower, momentum picking up. You took a low-risk bet. You knew that you were entering here, the high here. You knew you were stopping here if the trade didn't work. Because, as I showed you in the bond trade, trade might not work. It doesn't have to work. And this one did. So it was a nice profit. The key is like this. In order to become a successful trader, you have to trade without fear. That you have to accept the responsibility. It's no one's fault if the trade doesn't work. It's not a big deal because you're mitigating your risk on any trade. You're identifying, you're measuring your risk, you're accepting your risk. That the idea is that you build skills in order to interact with the market. And also I want to tell you this, if you're working full time, don't think that you can watch a 60-minute chart. Do a daily chart. It's the same thing. There's no difference. Don't think that you can do a 5-minute chart if you're going to be working full time. It's not reality. The biggest point I really want to point out is that you really have nothing to fear when you observe the markets free of distortions and distractions. Distractions are work. Distortions are your opinions. You just follow a simple pattern. You predefine exactly what the loss is in the trade. And when the trade doesn't work like the first, well actually it was the second trade that I showed you, you don't feel any threat of pain or aggravation or anything else. You just, let's see what happens. Let's go look back at this thing. This thing's working nicely. Okay, let's go back to this one here. When you have a loss that's predetermined, the other thing is you have to execute it without any hesitation. Because if you don't execute it, you're going to lose a lot of money pretty quickly. But you trust yourself to cut your losses quickly when the trade doesn't work. And what I suggest is that you put the stops in the market immediately. Again, to sound repetitious, you're predefining and you're cutting your losses short. Let's go back a second, and then I'm going to make myself available for questions. What you have to ask yourself at any point, what is the market telling me at this moment? Forget about your opinion, my opinion, CNBC, anyone's opinion. Opinions mean nothing. What is the market telling me? Where is the crowd going to be wrong? Who's paying up to get in? Who's putting their bets on to get in? And who's getting scared to get out? Is their strength building or diminishing? Here we see increasing by an MACD. So the momentum's building. What's going to happen when the people that are short realize that their trade's not working? Look at this bar. They're going to stampede out. What's that tell you? Tells you that they're not happy. That tells you that maybe you should sit through this and try to wait till you get to that point. What is going to disappoint the herd, as I call it? What's the likelihood of that happening? How about you ask yourself, what is my biggest risk in finding out? I'm willing to put my money on the table and let's see what happens. Again, we look at reference points, lows, and failed lows, failed breakouts. Because when they have failed breakouts, they're very strong signals. And that's why I'm talking about this. They're not perfect. Like trend following is not perfect. There is no perfect. But the idea is that we limit our losses to small amounts. And these significant reference points, they give us high probability trades with low risks. So really, when the market gives us signals like this, we want to react. And when they don't give us signals, don't start trying to make the trade happen or squinting at the screen. You know, a good signal jumps out at you. Again, all day I looked at a bunch of markets. Look at this thing happening. Wow. You see it moving. I waited all day for this trade. And you see it happening amongst your eyes. It pays to wait for signals. Beginners look for challenges or they're looking for excitement. I've had students that they tell me they want to trade because they were looking for excitement or fun. I'm looking to trade for one reason and one reason only. I have a wife, I have 3 kids, 2 dogs, and I love trading. I love the idea of catching a trade like this. Again, here it is. It's the same situation. You can look at it's happening as we're talking. Every second is going by, and it's moving. Professionals look for easy trades. We look for setups. We look for patterns. Losers, 90% of the traders, they look for action. I'm not looking for action. I look for boring. Boring is good. I have no fear putting on the trade because I've identified my risk. I knew where the trade doesn't work, and I was already had my stop in the market. You have to ask yourself, does anything have to happen? And guess what? It doesn't. This is what trading is. So I'm going to throw the ball to you guys, and I'm here for questions for the next couple minutes. And if you know whatever your questions are, let's put your hands up and then type your questions in, and let me see what they are. And here we go. Let's see what. Okay. Let's see what the question is. Well, this one doesn't have a question. It's not written here. Okay, so let's delete that one. Don't understand this question. Down. Let me give you guys a minute or two to just see if you type in some more questions. Okay, here we go. What moving averages do you use on your charts? Guess what? It doesn't matter. Because if something's going to move, it's going to move. These are very simple moving averages, a 10 period, a 30 period. They're not telling me anything. I just like to see it close above, which it did here, which confirms. I mean, everything is lining up. The momentum is lining up. It broke a trend line. It was above the 10 period exponential moving average. Nothing, not rocket science. It doesn't have to know exact, parameters. That's not the issue. The issue was more important is the pattern, which is the methodology, which I just gave you. Then the other issue is it's going to be you. And this is going to be the discussion of our next discussion next week, I guess. That's when Elaine is going to do this, is how to trade without fear. How to not trade without greed. How to build a trading plan. Because this is exactly what I teach at trendfollowingmentor.com. Let me see if there's any more questions. Okay. Okay. What's the correlation of 14-day and a 15-day? There is no correlation. It doesn't matter. You can pick the number. It could be a 10 and a 30. It could be a 10 and a 25. The moving averages do not matter. The indicators don't have to be complicated. use simple, robust concepts, and they work on all time frames. If it's going to be a 5-minute chart, a 60-minute chart, a daily chart. But what is my point? The point is very simple. It has to fit your personality or your work schedule. If you're working a job, don't think that you can do this in the middle of meeting a client. Or if you're a lawyer and doing a contract, don't even kid yourself. Look at daily bars. It will take you no more than not even a half hour maximum in the morning. Primarily, I do my trading primarily is dailies. It takes me between a half hour and an hour. I'm done every day. These 60-minute things, they take a lot of time. We jump to the next question. Let's see. Any other questions? Okay. Let me just give you some more detail here. No, this wasn't what I was looking for. 1 second. If you want to contact me, this is my email. Feel free to contact me. And what happens, a situation with ForexP, again, for this upcoming book, The Bible of Trend Following, what we're doing is we're sending out a free chapter of the book to anyone who's interested. And again, this is something with ForexP. What I understood from them is, again, I'm not 100% positive, but if you open an account with them, they'll give you the book. But you can email me, Andrew@trendfollowingmentor.com, and I can send you the chapter. I'll send you the forward of the book. You can come to the website. Oh, here, 1 second. We have another couple questions. What MACD percentages again? Michael, it doesn't matter. These are just standard. Here, I don't even know what they are. Let's see. Let's see. Configure. No, wrong. Cancel. I want to say that they're, let's see. Show studies bar. I'm not sure what they are, and they don't even really matter. They're standard. No, they're standard. I don't even know what they are. It really doesn't matter, to be honest with you, as far as the MACD. It's minor. Basically, you're just looking for something to have a divergence. And again, that's the key point, is the divergence here. Divergence, let me move this so you see it a little better. Lower, higher, lower, lower, higher. We're moving higher. So what we're really looking for is a divergence. Again, I want to thank everyone for coming. You can contact me for your questions. I'm here to help you. Oh, I also forgot. I have a 40-page free ebook on trend following. You can go to the website at trendfollowingmentor.com. Just sign up and you get it for free. But again, if you have questions, I'm here to help you. I know this is a process. It's not easy. Don't think it's easy. Don't beat yourself up. Trade with a plan. Trade with risk management. Trade that you have enough liquidity, enough money. Trade with the methodology. This is a simple methodology. And guess what? It works. You're seeing it live as we're talking. So again, I thank everyone for coming. And if you have any questions, feel free and shoot me a question. Thank you. I greatly appreciate it.